Hi, I'm Rod Hughes, and today I'm joined by Mike Lamberg, National Sales Director for Lam Insurance Services. Mike, thanks for making time to join us today.
Thanks for having me, Rod.
We're here today to talk about the hard market and really its impact on the nonprofit sector from an insurance perspective. So, Mike, without further ado, I'd like to just jump right in and ask you, for the folks that may be less familiar with the term hard market, what does the insurance industry look at to classify a market as hard or hardening?
So to put it simply, the insurance industry looks at what is the breadth and depth of increases in premium, but not only that, across a specific sector or class of business or product type, but they also look at whether or not the carriers in the space are looking to limit or decrease coverages. So, based on this and based on what we've been looking at across the human service space, we are in a hard market, and we entered the hard market around the fourth quarter of 2019. We remain in that hard market today, though it looks like the market may be starting to pause a bit.
And for insureds, folks who are running businesses, running nonprofits, what does a hard market mean in practical terms?
So it means that carriers will be looking for a minimum level of increase at renewal. It also means that carriers will be more heavily scrutinizing losses, any losses that occurred during that policy period. It also means that underwriting information is going to be more heavily scrutinized, and there may be more information that's required as part of the underwriting process. Last but not least, it also means that carriers are going to be looking to decrease or limit coverage. So it's really important that any insured or any organization that's in the human service space really take a look at what's happening with their renewal from both the pricing and coverage perspective.
So in practical terms, a human service organization could find it a little more challenging to get the coverage they need in this type of market. Is that correct?
That's correct. Not only will it be more challenging, it's likely to cost more, and it may be that the coverage that you get will not be as much or the same as what they were able to purchase the previous year.
So, Mike, what's driving this current hard market? What's pushing prices up?
So really to just put it at its base, the biggest issue is that carriers are very concerned about long-term profitability. So then we want to try and understand, well, what is it that's impacting that profitability? The primary driver has been what's called social inflation. And this is the concept that claim inflation has far exceeded the pace of typical inflation on goods or services. To say it another way, a slip and fall that may have happened 5 years ago, and there would have been an insurance payout of, let's say, $50,000. Today, because of social inflation, that payout might be $200,000. So that increase in the cost of claims has been the biggest hit to carriers' profitability. There are some other factors that are very much in the focus of carriers as well. Just to name a couple or a few, changes in legislation. So in the last couple years, there's been legislation that's been enacted to open up the statute of limitations dealing with claims from when people were children. In New York, it's called the Child Victims Act. There's many different states that have enacted similar legislation. So carriers have concern that the opening of statute of limitations is going to increase the number of claims that they get. Those claims are going to cost additional money, which is going to impact their profitability. A few other things to name: economic uncertainty, wage and commodity inflation. So if a carrier is going to insure a building, the cost to replace that building is going to be significantly more today than it was just 12 to 18 months ago. And last but not least, market volatility. So many insurance carriers have investments, whether it's in the stock market, bond market, et cetera. The volatility around those investments has an impact on their profitability, which can have a downstream impact on the pricing of insurance policies.
Okay, so Mike, I'm going to ask you to look into your crystal ball. What's on the horizon for 2023, and what do you see as both opportunity and perhaps opportunities and challenges for insurance going forward?
So it's my belief that we're starting, and I think we're already starting to see it now. And I believe this is going to remain for the second half of 2022 into 2023, that we're going to see a hard market pause. Meaning that the rate of increase and coverage limitations are going to start to slow. And there may even be some pockets of market activity where we will see a decrease. Now, as a quick anecdote, there are many parts of the insurance marketplace that are going to likely continue to remain in a hard market. So as an example, large urban areas where you're looking to place coverage for affordable housing, that's an area that has been extremely hard. It's my belief that it may continue to be extremely hard. And the biggest reason why is because of some of the factors that we previously mentioned in terms of the social inflation, the types of claims that those organizations are seeing they're getting hit with a lot of the claims where we're seeing large social inflation. They're also hit with regular just inflation with respect to replacing a building. So those items are areas where we're continue to focus and continue to have our antenna up to make sure that we're trying whatever we can to give our clients and the human service industry the best possible outcome when trying to look for those types of policies.
Well, speaking of best possible outcomes, all markets are cyclical. So when and if the soft market does return, what advice would you offer to insureds to put them in the best position to take advantage of a soft market where perhaps premiums are a bit lower, access to coverage is a little easier? What can they do to make themselves more attractive at that point?
So it's a great question, Rod. One of the things I will say is that regardless of whether the market turns, whether it turns in a day, a week, a month, a year, there's many strategies, things that you can do right now that are going to help you and help your organization, again, regardless of what type of insurance marketplace we're in. The first is you need to review your organization's largest loss drivers. Now, there are certain organizations that have losses and it's very clear where are these losses coming from? Is it coming from my large auto fleet? Is it coming from people that are slipping and falling in my facility? Is it coming from client behavior? Understanding that is the first step to putting great mitigation strategies in place. So that would be step two. Is once you understand the loss drivers, you want to create a loss control recommendation strategy to try to put in place different either programs or systems or processes to make sure that you mitigate and try to lessen the claims that you're going to have. Once you create that strategy, you want to implement the strategy. Sometimes that strategy you might have, so for an organization, you might have 5 different things that you want to do. You might say, I have an auto fleet, so I want to make sure that I have the best driver safety training that's available. I also have had some claims related to my facilities and the different buildings that I'm in. You may not be able to tackle all of these strategies at once, but you want to take that list of strategies and start to implement where you can move the needle the most. Next step is you want to document all of your loss prevention efforts to highlight your positive attributes. Those are things that carriers absolutely want to see. They want to see what are you doing to prevent and understand where your losses are. In no way, shape, or form should it be looked at as something that I don't want to inform the carrier about. Make sure you help the carrier understand what steps you're taking to make sure that you're the best possible risk, as a carrier would put it, out there. Last but not least is you want to gather your renewal information and gather the information about the loss control and loss mitigation strategies, you want to get that as early as possible ahead of your renewal so that you can provide that information to the insurance carrier and put yourself and your organization in the best possible light to get the best possible outcome in a difficult market.
Well, Mike, that's great advice. And thank you so much for spending time with us today to talk about the current hard market. This was a great discussion with Mike Lamberg, National Sales Director for Lamb Insurance Services. Thanks for your time today, Mike.
Thank you, Rod.